Boom! What's going on, guys? Welcome into your energy news beat here on this gorgeous Friday, March 5th, 2021. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Tilley. How you doing today, my man? It's been a good
It
week.
is a Oh, it's a great week, Michael. You did it, hit it out of the park. We've had fun. We had the greatest quote of any kind this week.
Yeah, we did. IR guy of the week. We'll just get it out of the way now. Goes to Saudi oil minister. What was it, Stu? Lack of transparency breeds transparency, and then boom, he kicked out people.
Oh, he goes, transparency requires lack of transparencies, and then that way we are
Yeah.
transparent. And all you press, get out.
Well, yeah, and we'll cover all that in a
thought it
bag
was
of chips
great.
here on today's show. You can check out to my left here. But guys, again, continue to subscribe. World's greatest YouTube channel, Energy News Beat. Check us out online, www.energynewsbeat.com. Hit the notifications button. It's legit just an IV of news into your veins. We are also available on the Google Play Store. Go to Energy News Beat. Our app is here. Is it live, Stu?
Still checking, but it is there. It's approved. We're waiting for it to go live.
Oh, okay, so we're still waiting, but we will by
It-
next week. You'll be able to download both on the Google Play
this
Store.
weekend.
This weekend on the Google
weekend.
Play Store and the Google App Store. It's going to be absolutely awesome. Check us out there. I mean, interesting day for top-line indices in terms of the equities markets. I'll read you them right here. SPY jumps 1%. NASDAQ about 0.75 of a percentage point. Dow Jones trades 1% on the upside. 10-year yields drop about 1.2 basis points or about 0.8 percentage points on the downside. Couple things here. It was a volatile trading session. Early on, pit opened 7:30. We were down about percent, so I was watching the order flow coming. Woo! Selling to that downside. Job numbers come in, which actually said there was a pretty good jobs report came in. Let me find the top line numbers on jobs right here. Yeah, so we are expecting 210,000 jobs. We put a non-farm roll payrolls print of 397,000. So good to see some people, more people getting back to work. That roll industries highest mover on the day was the U.S. Energy sector. It's actually led by Occidental Petroleum, which we'll cover here in our U.S. equities. But again, today the yields again rang true. Yields were up in the morning, stocks were down, yields turn around, stocks begin to rise. So again, continue to watch that good economic data on the front. Crude oil, Stu. Holy smokes. We were a high of 66.40. We're currently trading 65.96. Just an unbelievable 3.5% split. Gotta love it, Stu. Again, our prices just went up another 20%. Back end of the Brent curve, 69.28. That's a 0.6% increase. Back end of the WTI curve, 61.69, up 3 percentage points. Woo-hoo-hoo! Bull market, baby. It ain't affecting natural gas, though. On the back of warmer weathers, we're down another 1.5%, $2.70, $2.93 on the back end of that curve. XOP, which is our E&P Securities Contract, as I mentioned, leads the way, up 3 percentage points. OIH, which are VanEck Select Oilfield Services, it's up 3.5 percentage points, up to $216 and $10. Let's go and look at some of our biggest movers. We'll start with the downside. CDEV, not great. They're down 7. Sundance, down 7. Evolution Transfer Infrastructure, they're down 10, and New Concept Energy down 14 percentage points. On the upside, some good numbers here. Devon up 8 percentage points. Matador up 8 percentage points. As I mentioned, QEP, Oxy, and Diamondback, they're all up 7 percentage points. Berry up big today. Biggest mover, though, WTI Offshore, they're up 14 percentage points. We also see High Point Resources up 10 percentage points. Man, internationally, dude, it's 66.06 right now. I mean, our prices just went up another 5%.
Boy, when you're wrong, you're wrong. And yesterday I am glad I was wrong, but boy, I called 1.75 million barrels increase. Turned out to be 300,000 barrels per day, almost nothing.
You were wrong.
I was wrong, but you know what? Okay, I'm glad I was wrong. Here's the funny one. The only losers out of yesterday were the tankers, the shipping tankers. Oil tankers owners drop in wake of shock by OPEC move. I got to hand it to the Saudis. They just hit it out of the park again, surprising everybody. The mood is depressed, said Halvor Epstein, a tanker broker at Fearnleys. Continuation of the cuts is the last thing we need. So all the oilies in the world, and these guys are the only ones upset, I'm okay with that. Okay.
I love
The
how
next
I
one.
want to become a tanker broker. Wait, can he call us up? We were trying to buy a tanker. He didn't call us. I don't like this
We
guy.
were. Even last year, we were using our bathtubs to store oil. I mean, okay. Here's the other one. Shell UK. They're continuing to do their Shell UK head to lead low carbon fuels. North Sea Boss replaced. So they are adding the UK. Siad Lynch will become Shell's global head of low carbon fuels. They are moving their people, and they are really making the change in there. Another Shell's move toward renewables was significant boost to the electrical vehicle charging point network in January. Anyway, so Shell making the run.
Yeah, I see it. As always, guys, those international stories via the world's greatest website, energynewsbeat.com. I mean, it's quick before we get our DRW here. Rig counts +1. Honestly, I think that, not that that's low, but I'm shocked it's that low. Going to be very interesting to see how the next month plays out. Will we see 450, Stu, by the end of the month? When it's April 1st, do you think we'll see it's 403 right now. We added one rig. We're currently about 403 rigs.
Yes,
I'm setting the over-under at 449 and a half rigs. Are you over or under?
over.
Oh, should I take the under just to mess with you? But I think it's over
Please do.
too. I think I'm going to go
All right,
165. I'm going 465. What's your number?
467.
Ah, okay. I see what you did there. Yeah, speaking of production, I thought this was really interesting, Stu. So in the wake of all of this cold that was going on in Texas, I found this really interesting. You ran this story this morning. Austin, Texas is set to roll out an entire fleet of electric vehicles, okay? But the funny part is
Yep.
the 12 electric buses they already had were inoperable when it got so cold. They spent over $650 million they're planning on spending over 20 years for electric buses and a charging facility for 187. The problem is they haven't discovered how to happen if it gets that cold again. Gotta love it.
And it's never going to get that cold again.
Yeah. How's the bailout coming? You still got your hand out?
We are seceding. We're not going to need a bailout, baby. Texas is going to secede.
All right. Texas secession. Sign me up. So I can
All
stop
right.
hearing about you guys. With that, guys, I think what we need to do is we got DRW on the line, so we're going to go ahead and switch over to
Fantastic.
him, finish up the show. Well, David, seriously, thanks again for joining us today. Excited to have you. I mean,
Great
as
to
we were
be
just
here.
talking, I really think we got to. I think today's and this week's start and ends really with OPEC. So I think we'll start first with give us your 30,000-foot view of what happened with OPEC, and then maybe some of the fallout that you see from your side.
So I've been thinking about it strategically, right? And the gift to the market the Saudis gave at the beginning of January when they took 1 million barrels a day off the market is really what led from oil to move from 48 to 61. Then yesterday, when they basically said we're going to continue to roll cuts forward, it was very interesting for three reasons. Number one, oil's obviously moved from 61 to 65, which there are those who would say the market's incredibly tight. I would not say that it's tight because they're managing it. And I think that the reality is demand is not as high as we think, which is why they cut the barrels. But right now we're all about money flow, and money flow is flowing into oil and flowing into energy equities. So what a better time to remind the world what cheap, affordable oil and natural gas does for the entire humanity. And so I think Saudi is playing a bit of a game saying like, all right, Green New Deal, you guys want to, you're going to experience some pain when consumers are driving May long weekend and gas is $3 a gallon, and jet fuel when people start flying again has that 10 or 15% premium.
Yep.
And then conversations are going to come back to, do we really want to pivot away to a world where oil is scarce and underinvested? Or do we need all forms of energy are good? So I think it was a brilliant strategic move on the part of the Saudis, and we'll see kind of where it goes. But I'm fascinated so far.
I'll tell you what, David. Yesterday, I was sitting here with the film on and I was watching it as they were doing the OPEC. I have to hand it to the OPEC minister. He was sitting there and he came up with a quote of the century when he said that transparency is best when you're untransparent so that we can have more transparency. And then he ushered all of the press out. So that is the quote of a lifetime there. Transparency requires untransparency. And then the Russians were wanting $500,000 barrel increase. And so they begrudgingly, caved in on this. And so as we take a look at what's going to happen around the world with, I love that quote. I'm sorry, I'm still buzzed over that quote. But what do you think about the Iranians and everyone else that is in there? They're still a mess. Do you see that as even impacting anything?
So let's say yes and no.
Okay.
So I've learned, if anything I've learned from 2020, it is that narrative matters, facts don't. And they don't matter until they do. So I'm going to use Tesla as an example on a quick tangent. They were $850 a share. They were added to the S&P when they were like 650 and their stock went up 25, 30% because everyone needed to buy it. But the fundamental tenets of their business are they lose money selling cars. They make money selling credits for cars that are not electric. And so, like, facts matter until they don't. So the Saudis and OPEC came out and said, we're not going to increase production.
Right.
But of course they're going to increase production. It's like the Saudis kept 1 million barrels a day off the market, but then they were added exports because they were shipping stuff out of storage.
Right.
So they're still selling the same number of barrels to where they need to, but the narrative is they're cutting. So number one, I would expect to see way higher cheating. Number two, I don't think demand is coming back as much as people think it's coming back. This whole great reopen trade, everyone I know that is not afraid of the virus has been out. And as much as I wish I could go to like sports and movie theaters and be full and go to clubs and be grinding against like half sweaty people naked, like I want to do that. And I can't. But
you and me both.
Everyone that I know that wouldn't be doing that is already going out.
We're already going out as much as we can. Yeah, I agree with you.
And then the people who are afraid of the virus, they're afraid of the virus, but I know a lot of young 30-year-olds that are teachers. And this is not to begrudge teachers, but they don't want to go to work because work imposes on their life. And so they're like, I'm terrified of the virus. I'm also, it happens to align along political lines. So they don't want to leave the house. They're naturally introverted. If they're in a sales role, the people who do the selling are the ones who desperately want back in the office. And the people who don't like the human interaction and are introverts don't want to go there. Those are also the people that probably aren't going to all the places. So like, we're kind of as open as we're going to get. Maybe 10% people more go out, but I'm not buying this great reopen trade. And so I think OPEC is right to be cautious about bringing inventory back. But as long as hope is a plan, people should be hedging the shit out of $65 oil for the next 2 years to survive. I would have been hedging at 50 and I would have been.
Yeah, I was going to say RIP. I saw this tweet this morning. RIP everybody who hedged at $50. Sorry.
And I disagree with that because number one, I looked back at in January 9th, I went to New York and I was on the Commodities Edge with Alex Steele on Bloomberg. And it was the thing that really on Twitter got me shit kicked was I said, I like Callan, CDEV, and PDC. And here's why. Because the US can't grow. We're restrained because of cash flow, and the world is going to be short oil, so oil should be $60. Now, it turns out I was 13 months early on the commodity call, but all of those stocks are now up 50 to 100% from where I called them. But when I was on the Commodities Edge, it was 3 days after we had murdered an Iranian general, assassinated with a missile. And at that time, I said every company should be hedging because the strip was 60. And I said it when Oxy bought Anadarko and the strip was 73. So you should always be hedging to take commodity risk out because you're never going to be right on timing. But if you hedge to 50, it means when everyone cheats and when demand and when all the bad things that can happen do happen and oil goes back to 45, which it will at some point, then they are protected and their business moves forward. More to the point, all these guys should be using this opportunity with high valuations to get those deals they've been talking about done. We need SM to go away, Callan to go away, CDEV to go away. Ovintiv needs to buy. Like, they need to be bought, consolidated, so we have more political clout when it comes to fighting for the importance of oil and gas.
One operator to rule them all. Hey, David, real quick, on your Friday with your call for the Great Shrug, I read that this morning. It was an outstanding write. And what are you going to say to the folks out there when we are constantly decommissioning plants before their age is over, so that you sit back and we're wasting years of good productivity on plants? What are your thoughts on that?
Yeah, I mean, I would just push this to people. When you look at how far battery technology has come, I don't think it can go as far as it needs to, but it has come a long way. Solar technology, I wrote a piece this week about a 2007 installation of a solar farm in Denver that cost $6.9 million for 1 megawatt. And everyone came and they were hammering me and they said, yeah, but David, costs have come down 80%. Yeah, they have. And so if you made that same investment today versus when you made it 14 years ago, it would be more commercial. So for us to decommission existing technologies with which work and then charge that decommissioning back to fixed rate utility payers to make their bills go up in advance of technology we know doesn't exist to the level that it should, I struggle with that. And I think consumers are going to get pissed off when they find out that their bills are going way up in 2021, including their health insurance is going up 20%. Their home insurance is going to go up 20%. Their food is going to go up 20%. Their energy is going up 20%. And guess what? Their wages are going to stay flat. So when the Fed says inflation isn't a problem, they are incorrect.
But I'm getting a $1,400 check, so it's all good, right?
You're doing great, Michael. Yeah, you should.
Great. I'm doing great.
Yeah, put in Bitcoin.
Yeah, I'll tell you what, I'm tired of paying taxes, David. I don't know about you.
Yeah.
Anyway.
Before, I think we just wrap up here. Was there anything on the E&P side this week that caught your eye? Maybe fallout from earnings? Me and Stu, we cover the news. Man, there was very little on the E&P front this week, honestly. I thought the big story really was OPEC. What are you seeing on that front?
So I think that the big story was the American Petroleum Institute is backing a carbon tax. And that Exxon added 2 very environmentally green people to their board.
So Ubin, was it Jeffrey Ubin?
Jeffrey Ubin, and I can't remember the other name.
Yeah.
But the important thing is, they don't have a dominant position. But again, this is just large companies bending over. Instead of them saying, we are an oil and gas company, we can make 40% rates of return for a fuel everybody needs, and our business is better spent being the best at that. And let other companies be the best at the other thing. Like, you just can't compare an 8%. Like, BP has this article that's out on LinkedIn that says they think they can make 8 to 10% on their renewables. Well, EOG has double premium locations, which when I think of DP, I don't think about double premium. However, they can get 40% rates of return at $40 on like a huge amount of their inventory. Why? Well, tell me why EOG wants to invest in wind. It doesn't make sense. So the fact that Exxon is bending over like that, and the fact that API is supporting a carbon tax, which, let's be clear, a carbon tax would be almost impossible to implement because 90% of the world's oil comes from outside of this country. And so in a global market, how do you move a solar panel that was made in China using 58% coal-fired electric generation? How do you move that across the ocean on a diesel ship, offshore it here, transport it to a house, put it on a roof, and then say, oh, actually, the carbon that you created putting that on is like really high. Here's a big bill. I just don't see how you implement a carbon tax. And it's crazy to me that API is, instead of pushing back on the narrative, they're embracing crazy extremist policies that are going to destroy our economy and make us less competitive.
Wow.
Yeah, I mean, I think it's that's a rosy end of the show. No, but I do think it is just fascinating to see. The API is a trade organization. They'll do whatever they can. Are they even relevant anymore? That's what I want to know. Is it really?
I would argue no. Not only are they not relevant, but all of the trade associations aren't coming together to come up with a cohesive plan. There's a child's cartoon that's been produced that it's like, I don't know, the Rainbow Raiders or some crazy thing coming out of California. And there's like literally a scene where these, like this unicorn and these little girls run up to some guy that has a fracking rig. And then they say, oh my God, are you the guy with the fracking rig? And he's like, yes, I am. I'm the man that wants to mix things up and make all the earthquakes because I got to shake things up and make me some money. And like, this is what kids are watching. And so instead of the API bending over for carbon taxes, they should be making like, this is what it looks like to live in a home without electricity. This is what it looks like when you can make your Tesla go. And they need to change that. Now, I will give credit at the end of the show to the Colorado Oil and Gas Commission, who awarded the first award for an extreme, I think they call it the Best Customer of the Year award for petroleum products. And they gave it to none other than the North Face, who hypocritically has not acknowledged that all of their products use petroleum products to make them. And then to use their clothing, you have to get in a Subaru or a truck to go to the mountains, where you then climb and invade all of nature and then come back and get warmed by a carbon burning fire. And so they gave them the Outstanding Customer of the Year award for all of their use of petroleum products. And so that is something our trade organizations need to do a better job of. So Dan Haley, well done on that. I give you 5 stars on the Uber rating.
Yeah, that's great. And if the API wants to advertise on the show, we will delete this episode, no problem. So we don't have to worry about that.
Cost them bucks, though. We'd rather have David.
Yeah, we're businessmen at the end of the day. No, I completely agree with you, David. And again, we really appreciate having you on the show. Check him out, hottakeoftheday.com. Subscribe to his Substack. Seriously, it's for some of the best in-depth content. You want to go kind of there's this idea of the signal behind the noise. I think you do a really good job of covering actually what's going on. Check him out again, Hot Take of the Day. But for all 3 of us, guys, we're going to let you get out of here. Finish up your day, and with our permission, you can get out of work and tell your boss it's on us. For DRW, Stuart Turley, we'll see you guys on Monday, guys.